Same old from the RBA today. The cash rate remains on hold at 1.5%, so no real movement. In terms of economic news, let's look globally first, and the US is probably the main story here. We did see the Trump administration release a tax reform package. Now, this tax reform package was all about sort of one flat tax rate of 20%. Now, the challenge with that is that it hasn't been so well received, and we think that Congress may not be in a position to pass that. So will this reform fail, as also the Obamacare reforms have also failed for the Trump administration? What we do know, however, is that the Fed Reserve have absolutely been signalling to the market that they're going to be changing interest rates. So that means interest rates are on the march, and that is also in combination with what we're seeing with the iron ore price around the globe coming off, and also some sluggish numbers out of China, that is actually putting pressure on the Australian dollar. So that's obviously good news for Australian exports, but for those of us who are about to travel overseas, the US dollar is looking to be a little bit stronger than the Aussie dollar. Domestically speaking, let's have a look at some of the numbers that have come out. So first of all, unemployment. So the unemployment rate is currently sitting at 5.6%. So that was the same as last month. We did see another 54,200 jobs created this month. Now we turn our attention to also job ads. So the ANZ Job Ad Numbers. So they were up 2%. And what's important about those job numbers is overall year on year, they're up by over 13%. So that is a really, really good number in terms of those forward-looking jobs that are coming through. In terms of business confidence, this one has been interesting. So the business confidence numbers were actually down from 12 points down now to 5 points in the month of August. Now that was a significant fall. No one can really put their finger on what has actually changed that for such a big fall. It's still obviously in the positive, so nothing to be too concerned about. Conversations are around what's happening in the geopolitical environment, North Korea, those types of things. But let's just not panic too much about that number and see where the trend goes for that. In terms of consumer confidence, well, consumer confidence was actually up 2.5%. Now that's a good indicator that we're obviously seeing some growth in consumer confidence. However, it's an index in the sense that anything above 100 is said that there's optimism. Anything below 100 actually indicates there's still pessimists and pessimism in the marketplace. So that reading still sits at 97.9%. So we need to get that back above the 100. And if we actually have a look at the long-term sort of consumer confidence numbers, we're seeing those around sort of 101 in terms of the index. Finally, I want to talk about retail spending. Now, we haven't got the August numbers. They'll be out later this week. But what we can talk about is the July numbers. So we did see retail spending up 3.5% on last year's numbers. But that, in terms of some of the feedback we're getting out from retail land is telling us that it's pretty tough out there at the moment. So that could mean that we're not going to see a really strong set of numbers in terms of retail spending moving forward. Now that talks about this concept of secular stagnation. Now secular stagnation is this concept whereby we have low growth, and we're talking about maybe 1 or 2% growth, and low inflation. Whereas, for the past, couple of decades, we've been sort of more used to 3 and 4% growth numbers and inflation running at around 3%. Whereas we're seeing, growth running around 1 to 2% at best, and we're seeing inflation also being very, very soft, if not non-existent at all. So it's important to understand that we may be in a period of secular stagnation because we have these record low cash rates, and that's what's causing it. So, we really do need to get that confidence back into the marketplace to try and see that growth and then to see interest rates rise. But right now, with household debt, at the second highest level in Australia, that's a real challenge for us. Now, in terms of the property market, let's change the pace a little bit. Sydney's property market is definitely starting to cool. That's a good thing. We're certainly seeing clearance rates in the outer suburbs of Sydney starting to slow down. We still see a little bit of strong activity in the sort of inner city areas, and that's probably a result of still a very, very strong economy. But we are starting to see, the number of stock on market starting to increase in the Sydney market. So we expect to see a slowdown in that market. In terms of the Melbourne market, well, we really are seeing really strong population growth, and we still think there's a fair bit left in the Melbourne market in regards to potential price growth. Auction clearance rates are holding pretty strongly. We just finished the AFL Grand Final, so we'll start to see more stock come on market. In terms of the Perth market, that's starting to really bottom out now. We're starting to see that market, reach its bottom, maybe a little bit more to go. Adelaide's still been a pretty steady market, reasonably strong. Certainly those inner city areas are performing quite well. If we look at the southeast Queensland, so 3 markets there, Brisbane, sort of Sunshine Coast and Gold Coast, really tight vacancy rates on the Gold Coast and Sunshine Coast, high yields pushing up prices in that sort of low entry level for flats and apartments. And then, really the other story of Brisbane is around freestanding houses. They're performing quite well, and obviously the ones to avoid is the oversupplied high and medium density apartment markets in that particular area. Canberra doing really well, but again, warning for the Canberra market, the land tax rates in Canberra are too high, so you wouldn't want to necessarily be an investor there. You give all your money over to the tax man at the end of the day, so be careful in regards to that market. Hobart's also performing very strongly, very small market. We expect that that's being driven by investors who are going in there chasing the higher yield. And Darwin is another market which is showing really good yield, but certainly a sluggish market in terms of the level of demand. So we're not seeing any price growth in that particular market. So overall, the market's positioned reasonably well. We'll see some regional areas such as North Queensland and some of the sort of mining areas in WA are starting to sort of bottom out as well. So it's an interesting time around the property market. Always make sure that you focus on supply and demand and you get some advice in terms of where you're going to buy, because the best time to buy is when you can afford it, and then to buy into those right markets where there's further capital growth to be had. Thanks for watching.